Hello and welcome to another update video about Matic. Matic is respecting the defined support and resistance levels really well on the chart. We have recently talked about this wave 2 correction that is unfolding. The yellow scenario is currently the primary wave count still, whereas I find it also very likely that we could get an extended B wave in the white count. Either way, and that's very important knowledge, in both scenarios, I consider the wave 2 not complete yet. So I would expect still lower prices, either more directly in the yellow count or via a diversion in the white count. Okay, so let me take you through the two scenarios and the relevant parameters for this week and the coming days. The idea is still that on the Matic chart, we've had a 5-wave move to the upside here into the 27th of December highs. The wave 2 pullback is here an A, B, C structure, where the C wave is likely still unfolding in the yellow count. Okay, we also see a head and shoulders pattern that would support this scenario, where we could say, okay, we've got a left shoulder, a head, and a right shoulder here that could indicate a local top in place, and then that we could come down a little lower in this C wave. The neckline structural support basically is here. It's not very well defined, but it's a bit of a range there. Round about here, 74 cents. Below that level, we have the 73 cent level, which is the 50% FIB level. So I would say as support, pay attention to the 73, 74 cent range. That's one of the key parameters for this week and the coming days. Then if we break below that level, let me zoom in, go to the 1 hour chart now. If we break below that level, it would suggest that wave 5 is unfolding, okay? Wave 5 of C of 2. And then, yeah, I would pay attention to 66.7 cents next as key support. However, in this scenario, it is possible that, yeah, wave 4 finished, but so far this only looks like a 3-wave move to the downside. It is possible that this wave 4 extends a bit. The resistance area that I communicated recently is not broken to the upside. So yeah, the market respected it. And we've seen a reaction to that area between 79.6 to 83 cents. By the way, that's another parameter for this week. It's the resistance area that I mentioned on the weekend, and the price rallied into it and got rejected. So again, respected the Fibonacci levels. That indicates that the yellow count still has a chance, obviously. It is possible, however, that the entire resistance area is maxed out by the price. It's, for example, possible that we see something like that as a more extended wave 4 in an A, B, C structure. This would only be ruled out with that sustained break below 74 cents. What happens if resistance breaks? And that takes us to the second scenario, in which, however, I would also argue that probably wave 2 isn't finished yet. So this overall correction. Well, it's very similar to the yellow count that I shared with you. It's just the difference is that this B wave, which presumably topped on the 11th of January, never finished. So yes, in both scenarios, I assume that wave A of 2 bottomed on the 8th of January. The idea is, however, not that this here was a B wave top on the 11th. Instead, the idea is that we still are in the B wave, and that is forming a larger A, B, C structure. That's possible from here. That recovery is still possible from here. And then we would come down. So this is, I think, very clear, because in both scenarios, the idea would be that wave 2 is still unfolding. How to deal with that from a tactical point of view? Well, I mean, the yellow support area is there for anybody who wants to look potentially for entries, long entries, scale in, okay? Take it slowly as long as we haven't got a confirmed low in place. If there is a high B wave, it can help to realize some profits, okay? You know, if the market makes profits available, it can be reasonable to take them. Okay, if there is no rally in a larger B wave, then it might be wise just to stick to the accumulation plan. So that's how to and then basically take profits in the third wave once it starts. It's more about, okay, we are in a wave 2 accumulation plan. that everybody needs to decide for themselves, right? To define according to your trading plan. But if a B wave happens within that wave too, a significant B wave like it already did here, but maybe we get another chance, then taking profits can make sense, okay? Because the chances are that we drop back into the yellow support area then anyway, but which is not guaranteed. Therefore, I would in a B wave not take all, close all positions, just partially. Partial profit taking if the market gives us a B wave. B waves are very, very difficult to, let's say, predict. They basically do what they want. So all we can do is really prepare for them tactically. I would not trade a B wave for the sake of trading a B wave, but I would trade third wave. And if the wave 2, where it's possible to scale in, if it makes available a significant B wave, yeah, partial profit taking can be a reasonable strategy. That's my update about Matic. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.